Money Track is made possible by the Investor Protection Trust. The Investor Protection Trust is a nonprofit organization devoted to investor education. Over half of all Americans are now invested in the securities markets, making investor education and protection vitally important. Since 1993, the Investor Protection Trust has worked with states across the country to provide the independent, objective investor education needed by all Americans to make informed investment decisions.
This is Money Track with Pam Kruger and Jack Gallagher. Bringing you real stories and real experts to show you what works and what doesn't work when it comes to investing your money. This is Money Track.
Hi, everybody, and welcome to Money Track. I'm Jack Gallagher.
And I'm Pam Kruger. Our show is about money and what actually works and what doesn't when it comes to investing and protecting it.
Pam and I are both online here in our home office. We're both wireless. And it turns out that Pam's dog, Chloe, is wireless today, too. No leash. Come and go as she pleases. Hey, have you ever checked out what's on some of these financial site blogs and stock message boards?
You know, this is where everyday investors go to find out what other investors are saying about stocks or, about gold or even real estate.
Or they just trade ideas back and forth based on something they've read or heard, maybe even seen on TV. Does that really happen, Pam?
Yep.
Hard to believe.
It does. It happens in here, too. Look, it says right here, this post says that IBM is a screaming buy.
Okay.
This other guy says, Google, sell it short right now. That means that he thinks that the stock price is going to drop like a hot rock. The question is, who has time to read all this stuff? And look at this guy's name.
Oh.
Who the heck is Buffalo Bill 007? He sounds like a real stock expert.
Or maybe he's a spy, Pam. I have no idea who these people are, but this one seems to know an awful lot about J.P. Morgan.
I don't know if you read this for entertainment, but just know that some of these so-called investors in here are really just trying to get you to Twitter about a certain stock, maybe some company you've never even heard of.
But the post is so emphatic about buying or dumping some stock right now. Got to get in or got to sell now. Clearly, these people want something to happen.
But why? Why do they care so much about which investment I make?
Well, the beauty of this show is that we can just take you to the other side of this conversation and introduce you to a guy who is just waiting for you to make your next move.
It's the white noise of another financial predator in the news.
For his own good.
Someone who crossed the line and stole a lot of money,
Fleeced of $1 million.
got caught and lost everything. But there is one thing that made Cole Bartiromo different, a standout among the internet's most wanted. He was just a kid in high school. It wasn't always like this for Cole. Before he got into trouble, he was a suburban little leaguer, in love with baseball.
I was so focused, so excited about each and every game.
But Cole was already starting to show another talent.
It started off really innocently as a little kid with a growing obsession to make money. From the Little League fundraisers, I would sell the candy bars door to door to the neighbors for $2 or $3 instead of the $1 that the league said to sell them for.
His next venture, learning how to scam would-be collectors on eBay.
The thrill, I had $30, $40, $50. Where it came from, I didn't know. I didn't know who they were. There was no face to the email address. It was just free money.
At 15, Cole scavenged, then sold 2 coveted Tiger Woods rookie cards for $240,000 in a legitimate auction. His dad let him keep $5,000 and gave him access to a stock account. And that's when Cole Bartiromo really entered the big leagues. Here's how he did it. It's called an internet stock pump and dump. Cole bought penny stocks, then logged on to popular message boards and hyped them up.
A classic pump and dump scheme is generated by someone who holds a security and who touts that security as going up in value. So the prices go up, and then once the prices go up, the person who's touting the security sells their shares at a profit, and then the prices collapse and everyone else gets a loss.
People liked what they heard and bought the worthless stocks Cole was pitching, never knowing a teenager was waiting on the other end to finish them off.
So then what do you do?
Then I sell.
Dump.
Yeah, just get rid of it, dump it.
And overnight, Cole turned $5,000 into $50,000. It was real money, and it was turning Cole into a real criminal.
Were you surprised that people were so easily convinced, tricked?
Yeah, I was amazed that it was that easy to get people to buy a stock.
By his senior year in high school, he was running a fake investment site called Invest Better 2001. And get this, the website promised investors a guaranteed return of 2,500%. He was offering risk-free investments from safe bets on sporting events. Believe it or not, strangers sent him $1 million in just 1 month.
What in the world were you thinking?
Me?
Yeah.
I was thinking, I feel really special. I'm in school, and I couldn't wait to get home and continue running this company. I felt like a CEO.
A Mission Viejo teenager is in trouble with the law after the Security and Exchange Commission accused him of defrauding people out of millions of dollars.
Suddenly, Cole found himself in hot water, but he was also in the news and loving every minute of it.
At first, I thought it was awesome. The teacher was coming up to me and asking for my autograph that first day on campus after the news broke.
And what kind of teacher was he?
An economics teacher.
He got lucky. First time out, the SEC let him go. But teenage Cole had tapped into something dark and exciting. He found he could make a lot of money breaking the rules, and he was good at it.
I had finally accomplished my goal of being a millionaire by the end of high school. I've been saying that since I was 14, that was my goal. It sounds ridiculous, but to me, I knew I could do it. No one ever taught me any of these things. One by one, they all came to me.
At 19, he was at it again. He attempted to embezzle $400,000 from a Mission Viejo bank to fund more gambling.
I'm walking to my car, and all of a sudden, it's a scene out of a movie. You know, there's 2 or 3 cop cars, and guy gets out and puts your hands up, and he's got a gun, he's pointing it, and I was just like, and I'm just out of my mind.
Do you think I've committed a crime? I have committed a federal crime?
At that point, I realized I'm in deep trouble.
This time, Cole got caught, and this time, he went to prison.
Does it affect your banking relationship? Like if you...
Looking back, Cole saw his victims as simple people who gambled against a master player and lost. Remarkably, he makes no apologies.
If you decide to invest, you're taking a risk, you're making a gamble. So hopefully you put in your research. If your research is my opinionated message, more power to you. Roll the dice and see what happens.
He has no empathy for his victims.
Robert McGann was the assistant U.S. attorney who prosecuted Cole's case.
And worst of all, I don't believe he truly has any empathy for his family on whom he has inflicted such pain and grief. I honestly don't believe that Cole has a shred of emotion for anyone other than himself.
There are strict laws in place in California when it comes to internet investing.
You can only invest in a registered security. It has to be registered either with the state or with the SEC. And if you trade in a security that's not registered, then it's illegal trading. And there are civil and criminal violations that will apply.
So where does this story go from here? Cole Bartiromo is still thinking big. He's writing a book. He wants to go back to playing baseball. Mostly, though, he dreams of getting off probation and getting back onto the internet. After all, in his mind, he's still a businessman and an entrepreneur The reality is, though, at 24, Cole Bartiromo is a convicted felon.
Having learned your lesson, why don't you follow your dad's footsteps and go to the 9 to 5 and...
My dad, that's all my dad wants from me now. He said I should just get a job, be a hard worker like he is, a hard-working, blue-collar American like he is.
Honest, reliable. Why not?
I feel that's throwing away the gifts I've been given.
Unbelievable. And this is the kind of story that leaves me with more questions than answers. So let's get Cole back here right now.
Cole, what made you think that you could cross the line and not get caught? Did you think that somehow you were different from everybody else?
Hey, Jack, I definitely did. I thought I had everything figured out, that I was different, and that I had my own path in life all set out for me. And there's a lot of kids out there that think the same thing, and for them, I'd say just definitely think about it. Just enjoy your life, enjoy your high school days, and don't get caught up in trouble.
Cole, you're pretty young. Do you ever see yourself heading in a more conservative and, dare I say, maybe a more ethical direction?
At this stage of my life, in my 20s, you know, I should be conservative and start saving for my future. But I'm not a patient person, and I do feel like I have a lot of qualities in me to seek bigger and better returns. But conservative is definitely the safer way to go. When you start looking for big risks, then that's when you get caught up in get-rich-quick schemes and you end up losing your money.
Well, thanks, Cole, for being here and sharing your story with us.
Hey, best of luck, Cole, and keep us posted, no pun intended, as you go.
I want to believe that as he gets older, he'll also get a bit wiser the next time. If there is a next time for him, because he is on probation, so he may be going away for a little bit. But boy, did this story open my eyes as to how one person, in this case, a 17-year-old, can manipulate a stock.
And he has figured out that it's relatively easy to take a huge position in some little no-name stock that trades for like 15 or 30 cents a share. You're not going to find these penny stocks traded on the big exchanges like the New York Stock Exchange or the NASDAQ, because we're not talking Google or Walmart. Those companies trade millions of shares every day.
Well, I think we've had our share of financial scams in the last couple of years, don't you, Pam?
You think?
I think so. You just saw how Cole was able to manipulate the price of one of these penny stocks.
Now remember, he did it by buying up big chunks of those tiny stocks. So our Money Track quiz question today is, what does it mean to have a controlling interest in a company?
Is it A, ownership of more than 25% of a company's voting shares, B, 30%, C, 50%, or D, 100%? Think about that, and while you are thinking, I'm going to ask Chloe, Pam's dog here, to grab hold of our web address where you can learn a whole lot more about this story and other penny stock schemes you want to avoid. We also want to hear your stories. Have you been buying microcap stocks? Have you done any real serious jail time? Tell us if you've encountered this kind of scam. That's moneytrack.org. She is a good dog, isn't she?
She's a good girl.
She works hard. I know why she's on this show. I better watch myself. She's going to take my place.
You said it. I didn't say that. Does anybody remember about 10 years ago, there was another kid just like Cole, okay? And he was 15 years old, but back then he was trying to get rich quick with internet stocks pump and dump. Now that kid was convicted of securities fraud, but he was running the exact same game as what Cole was doing right in here. And I remember that. Jonathan Lebed was all over the news.
I do remember that, and if I'm correct, he was the first minor convicted of stock fraud.
Yep.
So either Cole was a copycat or they went to the same high school. Scamuel C. Fraud High. The Fighting Madoffs, do you remember them? Maybe not. Okay, right now we're going to take a question from a viewer. Sarah is with us from Sewickley, Pennsylvania at the Café d'Ami.
I just saw what some kid did online, but what about other people who have been accused of pump and dump? And didn't Jim Cramer just get in trouble a while back for the same thing?
Sarah, this is a very important question, and thank you for asking it. Now we're talking about, when does the gray area of just creating a perception, especially a false perception about a company, cross the line and actually become outright securities fraud? This is heavy.
And Sarah, you mentioned Jim Cramer, and we're not going to pick on the guy here, but Pam, didn't Jim Cramer get into a little bit of trouble a few years ago when he admitted during an interview that he was able to spread false rumors about companies and thus impact the stock price?
What's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal and it is a very quick way to make money.
How easy it was to do that,
It's
right?
all gray area, you're right. And Cramer hurt himself by making those comments so blatantly.
That it's important to create a new truth, to develop a fiction.
Now remember, he was operating a hedge fund back then, so he cared deeply about the price moves of those stocks that he was trading. The whole point is, when does stock hype become stock fraud?
And that's today's Investing 101 topic, because I think we all want to know the answer to that. So joining us as guest professor for Investing 101 this week is Keith Woodwell. Keith is the securities regulator for the state of Utah, and I might mention, because I really like this part,
I know, I do
he's
too.
a former CIA guy.
I know.
Yeah.
Hey, Keith.
Hello, Keith. Sleazy tactics. First, Cole, his spiel, his pitch to get suckers involved in these small stocks is nothing new. Boiler rooms have been around for years, but introduced the internet, and it seems like there's more ways to get victimized here.
And they do it through messaging boards where there's a lot of different sites where people go to find information about investments, and they can share information, and it's a powerful tool. But unfortunately, the con men out there know that this is a tool that they can manipulate to their benefit. So they're operating on those sites where they have a target audience that is already willing to listen. These are people who are individual investors. They're already interested in researching companies and finding the next big thing.
But Keith, at what point along the continuum exactly would this kid Cole, for example, have crossed the line, you know, when he went from hyping a stock to actually breaking the law?
Well, the hallmarks of a typical pump and dump scheme is when you take some kind of controlling interest in the companies who share your offering or trying to sell to others. And my understanding in this case is that he had about 50% interest in the company at one point, and you cross a certain threshold, then the threshold's actually pinned at 30%. Once you reach that point, you have affirmative obligations to disclose your own positions.
Which in this case, clearly Cole did not do. But you do see it all the time on the financial shows, especially 24/7 news channels. Guests have to disclose now when they own a certain stock before they can hype it or poo-poo it.
Right, the analysts that come on and they say, we own this in our fund. But you know, it is creepy, really, when you realize that anybody with half a brain can do this online, what Cole was doing.
It's the glory of the internet and the age that we live in, where almost anyone can pretend to be anyone else that they want to be. You know, the internet affords you great power and great anonymity, but they know how to leverage these tools that the internet provides to reach the biggest audience they possibly can. You know, unfortunately, the reality, I think, Pam, is that the SEC and the state regulators, we don't have a very high batting average when it comes to stopping these pump and dump schemes. Most of them can operate in the shadows using the internet, and they're basically anonymous. And unfortunately, I think it's the minority of the cases that we're actually able to successfully investigate and prosecute.
And that brings us right back to these highly visible, influential TV or radio stock jocks.
You know, hey, even go beyond that. Billionaire investor George Soros, okay, he hardly ever says out loud what he's doing, but when he does, oh boy.
You see that there really is an acceleration in credit growth.
Everybody's listening, and you know and I know that people are copycatting.
So Keith, the litmus test is that 30 or 50% ownership stake in a company. That's the line in the sand. But at the end of the day, still a lot of gray area here.
Yeah, I think even with George Soros, Jim Cramer, it doesn't matter who it is. They all have their own spin and their own take on things. And what happened to the investment banking industry on Wall Street? And there's been a lot of talk in the regulatory community about who took down Bear Stearns and how did that happen.
Exactly. Again, big rumors, right?
In fact, Bear Stearns dropped about 98% in a couple of weeks. You know, so you have to question who's behind these stories, where did they originate, who stands to gain. Unfortunately, I think it's a reality that there is some level of manipulation that happens in the stock market. And the only protection, I think, for investors is to do your own due diligence. Don't get sucked into something that you do not understand. It's one thing to get ideas from people who are prominent in the industry or have a track record where they've made billions of dollars investing. But in the end, you need to do your own due diligence. And that starts with the very basics. It's the things people, frankly, don't like to do. It's reading company financials. It's actually reading through a prospectus for yourself and making a decision based on the real facts, not somebody else's spin on those facts.
Yep, rumors do have influence. So true, your advice. And such a basic rule, and one that we sometimes seem to stray from. And Keith, I'm going to ask you something. You ought to know. Any super secret agent stuff that you can share with us about stock fraud from your former life in the CIA?
Well, I can't share a lot of the details. It was a fun job, but I do have permission from the president to brief Chloe on some of the details if she's interested further.
Then we'll get it from her. Thank you, Keith.
Okay.
Okay, now, you remember about 15 minutes ago we asked our Money Track quiz question. Here it is one more time. What does it mean to have a controlling interest in a company? Is it A, ownership of more than 25% of a company's voting shares, B, 30%, C, 50%, or D, 100%?
Well, it turns out the textbook definition of what it means to have a controlling interest or a stake in a publicly traded company is C, 50%, which that is the textbook.
And you cross a certain threshold, then the threshold's actually pinned at 30%.
However, you just heard Utah State Securities Regulator Keith Woodwell explain that one can still be considered having a controlling interest by buying up 30% of a company's stock, so two right answers there. Controlling interest really just means that you or a group of you own enough shares to affect changes at the highest levels of management.
To learn more, much more, our website is moneytrack.org. You can get the entire transcript from our interview with Keith Woodwell and find out whether Cole Bartiromo is really a relative of Maria.
I knew you were going to say that.
It's all on our website. Don't worry, you and Chloe are money honeys too.
Okay.
Hey, it's that time in our show when we check off what we've learned. It is a quick review of our program. Here they come. Number one, we know that pump and dump stock schemes are all over the web, and you have no way of knowing who really owns a stake in these penny stocks. A 17-year-old who was just barely old enough to drive a car could be lurking in the shadows. The authorities can't possibly keep up with every one of these scams. Our advice? Proceed cautiously.
And we learned that anybody or any group who has a controlling interest in a publicly traded company now has to disclose that ownership position when he or she goes on the air or appears in print giving their opinion about a stock.
And finally, as we keep finding out again and again on this show, you really do need to stop and consider just how credible is the source of this information. Rumors can and sometimes do impact the price of a stock. So, to avoid getting suckered means you need to avoid investing too much money in any one stock. It's much safer to stay diversified and avoid the impulse to buy or sell on hype, especially when you're dealing with somebody like Buffalo Bill 007, who here has just posted a picture of himself online holding a bunch of 20s. Look at old Bill.
Thanks for watching, everybody. We're going to see you next time.
Bye everybody. Bill should get a larger shirt. That looks a little too small for him, doesn't it?
Can I have a sip of my water, too?
Caught a little shrapnel. Nobody sees the sound guy.
Nobody ever sees the sound.
Man responsible for the excellent sound that we get on this show.
That's right.
Never any rustling, never any creaking.
Although when something goes wrong, it's all my fault.
It's just all comes down.
It's because you usually screw up.
Yeah.
Stay. Chloe, go get your leash. Bring it to me. Throw it to me. Throw it to me. Did she throw it to me or did she throw it to the mama? Talent needs a drink.
Well, he's not going to tell his wife.
Oh, but he had a great time. I'm sure he doesn't even remember that. He had a wonderful time. Why did you follow Pam for a while? Why are you always with me?
You're funny.
They told me to stick with you.
The Money Track series is available on home video. Individual DVDs are $24.95 each plus shipping and handling. Please designate which volume when ordering. The entire DVD set is $54.95 plus shipping and handling. The companion book, The Money Track Method, The Real Person's Guide to Successful Investing, is available for $24.95 plus shipping and handling. To order, please visit the website at www.moneytrack.org or call 1-800-937-5387.
Money Track is made possible by the Investor Protection Trust. The Investor Protection Trust is a nonprofit organization devoted to investor education. Over half of all Americans are now invested in the securities markets, making investor education and protection vitally important. Since 1993, the Investor Protection Trust has worked with states across the country to provide the independent, objective investor education needed by all Americans to make informed investment decisions.